Bloomberg Audio Studios.
Podcasts, radio, news.
The IMF and World Bank annual meetings are now underway in Washington, D.C., and that brings together finance ministers, central bankers, and a lot of big policymakers to that town. And, of course, it also brings a lot of the big bank CEOs as well. Discussions about the global economy, fiscal policy, as well as regulation. Pleased to say that one of those big CEOs joins us right now. Romaine Vince heads BNY, the oldest bank in America, and one of the biggest custodians of assets in the world. He's sitting down right now alongside our very own Lisa Abramowicz. Lisa?
Thank you so much, Romaine. Yeah, this is the confab of everyone in finance and politics and policy making. And we have someone who has the first loan made to the United States when it was written up in 1789 during the time of Alexander Hamilton. Romaine Vince, thank you so much for being here. I want to start with the sort of dueling ideas here. We're talking about the election, the uncertainty. We heard from Romaine and Scarlett about maybe it's going to be a week before we know the outcome. What does this mean? Is the U.S. getting more isolated? And yet people seem very enthusiastic about the U.S. and investing in this economy. Can you explain how much you're hearing that?
Well, it's certainly been a theme here at the IMF World Bank meetings, and that's been true particularly actually from foreign clients that I've been talking to, foreign policymakers. There's frankly a lot of envy about just how well the U.S. economy has performed over the course of the past 2 or 3 years. It wasn't necessarily the expectation that we would have an economy today that has actually been performing quite well. Now, it doesn't perform as well for everybody, and that is clearly an issue that the politicians are grappling with. But for those participants in the stock market, it's been a boom. For companies that have been investing in the U.S., they've been able to benefit from the various strengths that the U.S. offers: energy independence, having a little bit of light industrial policy in the U.S., labor, technology. Those things have been a real benefit and a tailwind for the U.S. economy.
There's an issue here where people are talking about maybe the U.S. is going to lose its supremacy in some of these areas, especially given the amount of debt that the United States has and the fact that it will probably have to issue more and the deficit is getting a lot deeper. As someone who sees a lot of the transactions, who processes the transactions of Treasury trades and works with the Federal Reserve, how much are you seeing this?
Well, people do talk for sure about the fact, and we have to be humble about the fact that the world can change pretty quickly. And we've had enough reminders of that over the past decade that one has to plan for the future, but one also has to prepare for the worst. And that's a good, sensible approach to leading a business. We talk to our clients all the time about that, looking around the corners. Don't assume that rates are going to move in a certain direction. They could surprise us. Having said all of that, the benefits that the U.S. has right now are considerable. And that is what we are hearing from our clients. That is what we talk to other policymakers about. Growth really matters. At the end of the day, for a nation's prosperity, being able to grow GDP, being able to include as many people as possible in that growth, but you have to have the growth in order to be able to include people. And so in Europe, they're talking about social programs, they're talking about challenges. That takes growth in order to be able to pay for it. And so a strong economy is a really valuable benefit to be able to unlock all of those other things. Now, you're right, deficits matter a lot. And in the U.S., we're going to have to confront that. Other countries have already had to confront those challenges. But we have certain advantages in the U.S., particularly the fact that we're the reserve currency, that we have the U.S. Treasuries as a debt sort of risk-free reference rate instrument of choice. Those are, again, advantages. Can't be taken for granted, can't be complacent, but things that have been helpful to the United States.
Robin, well, just to pick up on that point, with the election less than 2 weeks away here in the U.S., are there policy proposals, policy prescriptions that you've heard from either of the candidates that you think that BNY needs to prepare for now rather than later?
Well, we're always preparing. It's our job to do that. We help our clients prepare. It's our platforms that ultimately our clients look to in order to be able to move forward. The work that we do in the Treasury market is a great example. And so to be specific for a second, both sides of the aisle have talked about wanting to be able to spend more. It is likely under both plans that deficits would raise. And so with that, need to be able to pay for it. And so making sure that we're prepared, our platforms are prepared to be able to handle more treasuries. We settled $20 trillion worth of treasuries earlier this week on our platforms, and so that's got to be able to scale. We feel comfortable we can. I think in the U.S. Treasury market in particular, one of the important things is going to be the question of where are the buyers going to be? Because there are a lot of governments looking to raise funds, the U.S. among them, but not the only one, and the private sector wants to fund as well. Remember, we've got an energy transition to invest in, data centers to pay for, infrastructure to pay for, the focus on the grid and all of the work that's going to be required for that. Those things cost money, that's financing, and we need buyers for that.
So then, circling back then to your own business and the growth particularly that we saw out of the last earnings report, I think you're now above $50 trillion in assets under custody. Assuming that continues to grow, where is that growth coming from, Robin, or at least where is the growth that you're targeting?
Well, the growth in our company ultimately comes from our clients and readying our platforms to be able to serve them well. You mentioned we are the world's largest custodian. We're also the world's largest collateral manager and largest issuer services firm. That helps to service all of that debt that we were just talking about. We're the world's largest securities lender. We have $2 trillion worth of asset management firms. So all of those platforms and being able to help more of those platforms help more of our clients, that for us is the growth path. That's what we've been executing this year, and that so far has been able to power our growth. But we also think it'll power our future.
How much, Robin, are you looking at possible acquisitions?
Well, acquisitions always have to be on the radar screen. We actually announced an acquisition about 2 months ago to buy Archer, which is a specific provider of managed accounts, which is one of the fastest growing areas of the asset management business. We felt that our platforms could benefit from that team, their technology, to be able to speed our growth. We're very excited about that. We expect it to close this quarter, and that's an important part of the story. And so we're scanning the horizon. That's a good example of it, looking for things that will speed us on our growth journey and will help us to serve our clients even better in areas of the market that are growing and maybe where the puck's going.
Robin Vince, thank you so much for being with us. Robin Vince, the CEO of BNY Mellon.